Hi everyone, once again welcome back to today's episode. Today is going to be a very brief one. I'm going to bring to you a little bit of a brief explanation on what's transpiring so far on Volatility 100. So it's going to be a very brief and a quick video. For those of you who are on my page, and I organized the free lessons for you quite recently, and one of the areas that I made mention of was to look well at a market maker model. All right, and so today there's a clear um, example that I have for you using volatility 100 charts. All right, so let's quickly go to today's video and then I'll briefly break it down for you. Now, on this chart, you currently see this is a 4-hour time frame. Let me go to the 24 hours time frame for you to see the bigger picture. Okay. All right. So on the bigger picture, this is what we have in here. On the weekly time frame, all this area of consolidation is actually into one imbalance. Okay, one fair value gap. All right. So all this area of consolidation has traded into a fair value gap, which is also sitting in another block. Okay, so my expectation is to see price go a little bit higher. Okay, if possibly leave the fair value gap and trade higher. Why do I have that expectation for price to go higher? Because I could see all this area of low resistance liquidity run. Okay, all these areas are engineered liquidity that are hanging in here. Okay, this area of engineered liquidity, low hanging fruit that price can necessarily look at taking. And then also there is this relative equal highs that's in here that price can easily delve into and so. Okay, so if this is a draw on liquidity for me on the weekly and the daily time frame, now let's look at on the lower time frame what's transpiring to give us more confluence to also be rest assured that we are seeking to go the direction that we are also seeing on the weekly and then the daily. All right. So on the 4-hour time frame, we have. So this is actually the derivative charts. Okay, this is a free chart presented given to you by derivative, but you can look at it for yourself. So you see that it's not the usual MT4 platform that you see. This is this platform is actually offered to you by derivative on TradingView. Okay, so you can actually go there and then have a feel of the chart in this way. All right. So now beautifully we have this chart presented to us. What can you see? So there's a beautiful market maker model set up right in this chart that we have in here that I'm going to break down for you to see. Okay, so in a market maker model, so if we are looking at the buy side of a model, we first of all look at the sell side. All right, so assuming we didn't have the buy side of this model and we are only looking at the sell side of the model, what can we see on the left side of the chart? Okay, so let's put this vertical line in here to indicate we don't see anything happening in here. We are just trying to delineate what we have seen transpiring on the left side of the chart before we actually delve into looking at what is also transpiring on the right side of the chart. Okay, so this is the market maker model or market maker buy model. Okay, we have to look at the sell side. Now, what are the key things to look out for? So before the market maker model, before it begins to trade off, it starts with, first of all, it starts with a consolidation. So we have to be able to identify that the market had consolidated. Then after the consolidation, what we have the market giving us two important stages. okay, two important stages. So first of all, we are looking at this stage as the accumulation. Now, it's not so easy sometimes identifying the accumulation phase of the market maker models. Okay, but this is the consolidation that happened first before the market actually took off. So let me extend the consolidation to the right side. So first of all, we have this consolidation. After this consolidation, what do we see? Now we have to have two stages, and the two stages will be the distribution stage. Okay. Alright, so now where are the stages found? Where are the stages found? So the stages can be when we have, after market leaves the consolidation, it forms a high and a low. We have form of a retracement, and then market continues to do an expansion, and then forms another form of retracement, and then continues to do an expansion. So you have what we call two forms of retracements. Okay, and it should be a typical high and a low which have been formed for you to see that okay, there was a form of retracement happening. Now, where can we find this retracement? The first form of retracement, after market left this consolidation, broke down with a candle out of this consolidation, it did the first retracement right in here. So you may likely find it's almost into the consolidation, but then we still know that there was a high and a low that was formed. So now watch this. From this swing low to this swing high, okay, from this swing low to this swing high is so from this swing low to this swing high is our first, after the accumulation or after the consolidation. Okay, so this is the first form of accumulation that happens. So they accumulated price, they accumulated more orders right in here. This is the first. So we have a swing low and a swing high before market continues trading lower. Now let's look at where can we find the next phase of the market where we had the market offering us a swing low and a swing high, where it was so now let's watch this. When you have the swing low and the swing high formed, when market leaves that swing low, when it breaks the low and continues down and it forms another swing low and a high, then automatically you have your next accumulation, or you have your next phase of accumulation, or the second phase of accumulation. So now let's watch. Let me expand the chart well so that you can see. Now when price left this accumulation, closed out with the body of the candle, where next did we have the swing low? So you could see that we had a beautiful swing low in here. Now I want to paint a picture for you to get this thing well, so that when you are trading it, you don't get it wrong. Okay, so we had a low, a high, a lower low, and a higher low. So this is a swing, but then there's a problem in here. Now the problem is, so far as we have this low and a swing, we are supposed to equally go and have a high formed in here, right? Now let's go to the chart. Right after we had this low, we were supposed to have a high formed after, but watch this, we didn't have any high formed in here, because this was a higher, lower, lower, so we didn't have any high formed in here. So it means that this low becomes a liquidity pool where price will just draw in and sweep liquidity. Then price comes down to form another low. So another low, the other low that was formed is right in here with this bullish candle. Now watch it. So this bullish candle in here forms the low. To the lower candle, to the left of it, and to the right of it, a lower candle, giving us a low. Then right after this, do we have a high formed? right after this low, yes, we have a high formed right in here. So now we have a low and a high, giving us another form of, so it means that our second level of accumulation happened right in here. The second phase of accumulation happened right in here. So from this low to this high, gave us the second phase of accumulation. And as beautiful as that. So in a market maker model, when you have the first stage, which is the consolidation, second stage of accumulation, and the first stage of accumulation, second stage of accumulation, and then we have markets trading into an area where it seeks for more orders and then it reverses. So now when price traded into this, it traded below this after the second accumulation. It traded into this area where it swept the low, the sell side liquidity resting below these lows. Okay, now let's take sorry, let me log this. Now watch this. So you realize that price didn't just take the sell side liquidity resting in here. It came down to take even the sell side liquidity resting in this side as well, inside this area as well. So here we have price sweeping lows. Okay, if price has swept a low or a long-term low, we know that liquidity has been taken. Therefore, the likelihood for price to rebalance itself after it has taken an external liquidity, it has to seek for an internal liquidity. And where we find internal liquidity resting, we have a very big internal liquidity resting in here, and then others as well. So price did the rebalancing from this side. So you realize that this is where we usually have what we call shifting market structure. Okay, this is where we usually have what we call shifting market structure. Now, on the 4-hour time frame, it may be a bit difficult for you to identify the structure shift. So usually, on 4-hour time frame, I usually go to 15 minutes time frame if I want to identify market structure shift. For if I'm looking at my analysis on the 4-hour time frame, where I usually want to go to is on the 4-hour time frame, right? On the 15 minutes time frame. So we had a swing low in here, swing high, swing low, swing high. Okay, this didn't take the high here, came down into this liquidity pool, this imbalance, and then it traded above this broke structure right in here. So when we traded above this, I knew that structure has shifted, and therefore we are looking to trade off on the market maker models, and then we are looking to trade off on the right side of the chart. Okay, so now you wait patiently for certain things to transpire on the market before you engage the market. You see, so first of all, we are looking for price to trade above the first area of consolidation. When price trades above the first area of consolidation, we usually want to see a retracement back into it, and then we can place a trade, put our stops below this low. Price rallies above it. If price closes below this low, then obviously it doesn't hold anymore. But price will obviously not trade below this low. So price comes into this, goes up, and then in this area too, when price breaks above the second or the first accumulation that it did in here, it trades back into that area. We found some imbalance right in here. Price traded deep into it, and then we have price continuing to rally up. Where is our target? Now the target comes in at where we want to always close above the consolidation. Should price break above this consolidation on the daily time frame, we know that we've obviously shifted structure on the daily time frame, and we want to rather seek for more higher prices. So let me show you on the daily time frame, which is a 24-hour time frame. All right, so on the 24-hour time frame, you could see that we were in a bearish market situation. Okay, we were trending lower, and then we are seeking, price is seeking to rebalance itself high. If it balances above this, then we know that we have shifted structure, and obviously you want to seek for higher prices. We may have a retracement back into these areas and then continue seeking for higher prices. This fair value gap right in here, I'm not expecting price to fully rebalance it again. Yes, it can trade a little bit down, but I'm not expecting it to close below the first accumulation level. I'm expecting price to rather continue higher. So I'm waiting to see what will happen tomorrow's candle. If I have a swing low right in here, then obviously I'm certain that I'm going to have more higher prices going to take this highs right in here. So for the brief understanding of how to trade the market maker model, this is how to go about it. I believe this video helped, and then if you are new to my channel, please do well and subscribe. I'll put the link to my WhatsApp page in the description box. You can join my WhatsApp page where I usually give free information and then free lessons. Alright, so I wish you all the best in your trading journey. If you are new to my channel, please do well and subscribe. I wish you all the best. Enjoy the rest of the evening. See you.